But one significant item here was an $81,500 payment to the Parks and Rec Foundation, which was part of the Hawkins settlement. And that was certainly something out of the ordinary. Once again, though, not too many other unusual things besides those. For the month of February, we had total payments, $352,304. As I look at that, there isn't too much out of the ordinary on that as well, other than a payment to Edward Carpenter, which was a payment on the artwork. So those are some of the highlights, at least as I see them, and certainly be willing to ask any questions. And the job cost reports are attached, and I think we're early on in the fiscal year, so there aren't any budget areas where we're in any danger at all yet or in need of any revisions.
I've got a question about district energy. Where do you see that going in the future in terms of payments? We're averaging probably monthly of about $175,000 to $180,000 or so per month. Where do you see that going as more people get online?
Well, I think the portion of it that the arena will pay will decrease over time, and a lot of those dollars we rebill out to various customers in the West Haymarket. So a significant amount of that cost is not the arena. It is to the other people that occupy space in the West Haymarket. And Mark Lycum does bills for them every month, and we've been getting pretty good success collecting them. When we first started, there was some of these buildings were under construction, and it was kind of a question whether the construction company was paying it or the future tenants, and that's all been worked out and it's going smoothly.
We spent some money also on like some heat regulators, I believe, a couple of years ago. Has that helped in terms of trying to again drive costs on DEC down for the arena?
Yes, it was some type of an environmental system, and I can't explain the details, but when I've talked to Tom about it, he says they're definitely starting to see, or have started to see, the effect of that and better controlling the systems within the arena, and it has. I know they've told me there's been some positive results in some of those bills going down significantly from that.
Okay. Was everything that you spent your money on, was it all within the budget?
Yes, it was. And Chris Lindner will tell you whether we were getting all our signatures and behaving ourselves.
Where are we with respect to contingency, both as an owner and where are we at in total contingency?
I don't have the exact figure, but I don't think anything's come out of contingency for quite some time, and it's still very substantial, I think in the least $9 million or more range. But I think what I could say is it was whatever was reported to you the last time is still the number.
Great. I've had nothing.
You good, Carl?
Good.
Okay, thank you, Steve. Is there public comment on this item?
Jane Kinsey with Watchdogs of Lincoln Government. I noticed that in the budget, the maintenance for the garages and the income, there was not a whole lot of income. What was the reason for that?
We do pay reimbursed Republic parking based on their actual costs, so that's the expense side of it.
So the charges are not a whole lot than what you're paying out, is that it?
Are you asking whether the income is exceeding what we're paying out as expenses for parking management? Is that, I don't understand your question.
Oh, okay, in the budget, there was not a whole lot
Jane,
of
could
cash
you-
flow there.
Could I ask you to speak into the microphone?
Sure,
so
I
it's all recorded?
couldn't hear him, if he
Yeah.
could use the microphone. Was there there's a lot of difference between the income and the outflow. The cash flow, I guess, is not a whole lot. So is there a reason for that?
I just don't understand where you're seeing your numbers.
Well,
You have-
we can get back to you, Jane, and get the actual number of the revenues for the parking garages.
Mm-hmm.
We'll get back to you on that.
Okay,
Okay.
that's good. Then, why was Parks and Rec involved in the Hawkins and the JPA settlement?
That was a legal negotiation that went on, and
Yeah, I remember that.
Yeah.
But why were they involved?
I
How were
wasn't,
they involved?
I wasn't involved in those negotiations.
You weren't? Okay. Does anybody know why that came through Parks and Rec?
Where are you looking, Jane?
It was part of the settlement process, I believe. that
What?
It was part of the overall settlement process of the case.
Okay,
And it's the Parks and Rec Foundation, which the Hawkins money is going to the Parks and Rec Foundation.
oh, okay, it's going into that, okay. And, let me see if I had another question here. I guess that's all.
Okay.
Thank you.
Thank you, Jane. Is there any other public comment? If not, is there a motion to approve the payment registers?
So move. Second.
Been moved and seconded. Further comment? Call the roll, please. Yes,
Yes. Yes.
they are approved. Agenda item number 5 is a review of the expenditure reports. Again, Mr. Hubka.
Kind of got ahead of myself. I mentioned those earlier, but those reports just reflect the payments that were made on the payment registers that you went over. And once again, we're early on in the fiscal year, and there's no particular strain on the budget at this time, and don't know of anything at this point of the fiscal year that will cause that later on either.
Very good, thank you. Is there public comment on this item? Seeing none, I guess we don't need a motion on the expenditure reports, so we'll move on to agenda item number 6, a review of the arena occupation taxes. Latest report on that. Again, Steve Hubka.
Yes, this is an agenda item that we put on there at the request of Councilman Eskridge. And it is a good time to take a look at this, as we've just completed another calendar year. The report indicates that for the calendar year ending December 31st, 2015, our occupation tax collections between car rentals, bar and restaurant and hotel was up 7.27%. And if you happen to have the report in front of you, you can kind of look across the monthly collections there. We were running almost the entire year, right around 7% up over the prior year. So it's very, very good news. We're collecting at a rate that, compared to what we showed the Turnback Tax Board back in October 2012, we're at a collection rate that was somewhere between 2025 and 2026. So we're doing well ahead of what was projected at that time. So continues to be good news for us. And even if you look back the prior year before that, it was right at 7.5% throughout the year, 8%. So if we have that kind of continued growth, we'll be in great shape for many years to come.
And that's on a budget of a 2% growth per year in the revenue, coupled with, didn't we budget 5% on the debt?
Budgeted 5%. Our interest rate ended up being less than 4%.
Yeah, 3.8 something, I
Yeah.
think.
And I think, Don, your projections are still based on 2% growth. So every year we exceed it by several percent. We're well ahead of what we expected to be and need to be, but we'll take that any day.
It's great.
Thank you, Steve. Is there public comment on this item?
Jane Kinsey with Watchdogs. What is the amount, the financial amount?
This last calendar year, we collected $15,739,568.
And where does that money go? Where do you park it?
Goes into the JPA Treasury,
Treasury.
and it's allocated among the various funds that are set up in the bond covenants.
Okay. Thank you.
Steve, that figure you gave was the calendar year.
Yes.
That wasn't fiscal, right?
Right.
Okay.
The last fiscal year was 15.4 million.
Right.
Okay, is there further public comment? Seeing none, is there a motion? Well, we don't need a motion on agenda item number 6 either, apparently. So we'll move on to agenda item number 7. Resolution WH 16-3, dealing with the financial audit and management letter from BKD. And Steve, you're going to talk about that, at least preliminarily here.
Yeah, I just like to say that the JPA has gotten audited now every year that it's been in existence by a nationally recognized independent auditing firm, which is BKD. With us today is Chris Lindner, manager on our audit, who also does the audits of many city funds as well as the overall city audit. And I think I'll just turn it over to him. He's got an audit report and a management letter here to present to the board.
Thank you. Welcome, Chris.
Thank you. Good afternoon, gentlemen. Again, Chris Lindner, an audit director with BKD here in Lincoln. I want to just cover the fiscal 2015 financial audit. So the documents I believe that you would have had in your packets, there's the audit report itself, and then the letter that comes along with it is the kind of the standard audit communication letter required under the auditing standards. Again, the communication is required. We like to have the formal letter that you have in front of you today. In looking at those, kind of looking at them side by side, because the letter kind of helps look more of a roadmap of the things that you're seeing in the audit report from, what are the significant policies of the JPA, what are some of the estimates that are required as part of those financial statements, what are some of those more significant or sensitive disclosures in those items. So kind of going side by side. A couple things I just wanted to point out as well from maybe an audit process and timeline and review standpoint. We begin our audit process very early on in the year, I guess, if you think about, the fiscal year ends, way back in August, and as part of that, then we're coming out and looking at, the JPA's control structure, and as that kind of relates to the cities, with the accounting really being done with the folks here at City Finance. That's part of our overall evaluation of the city finance control structure as well, and making sure that if the reviews require a certain number of approvals and signatures, that those things are getting done. Again, we're not looking at every document to make sure that those approvals are getting done, but we're pulling samples throughout the year and making sure that if a certain individual is supposed to be signing off on those, that is taking place. And if we had any exceptions as part of that testing, we would report that as a control finding within either our report or our letter. But pleased to announce, as part of that testing, we didn't find any exceptions to those controls, or that control testing there. So although we don't issue an opinion on controls, if we had any of those gaps or deficiencies, we would report those. So I'm pleased to announce we don't have any of those. From a timeline standpoint, then we come out and do more of the financial piece and get things wrapped up. In addition to the team that we have out here that comes out and works with the folks in city finance from the financial audit standpoint. We also then have myself looking through all the work that they perform, and then in addition to myself, we have another partner in our firm that's kind of independent of the entire engagement. That's then looking at the documentation, looking at the report to make sure that everything looks good from somebody from that step away, more of an independent, fresh look at those financial statements as well. Something to note: a few pages within the report, you'll find the opinion, our independent auditor's report. That opinion is a clean or unmodified opinion, so the financial statements that you see are in accordance with GAAP. And something else to mention, though, from a GAAP standpoint, obviously with the JPA being a governmental entity, the GAAP that you see is governmental GAAP, and so they follow some special accounting standards that are put out by the Governmental Accounting Standards Board. So the financial statements that you see are going to be a little bit different from what you might see in the commercial or private sector with a normal, retail type entity, just because of the nuances that are required for governmental entities in reporting. So there may be some items that look a little bit different. The recording and timing of items may be a little bit different from what you normally see, but just again, to keep aware of that. The other item I just want to mention from a financial statement reporting standpoint, the first financial statement you'll see is on page 7, and this is the governmental fund balance sheet and statement of net position, or again, the kind of a fancy governmental term for just an overall balance sheet. And you'll see several columns there, one for the project fund, and then a statement of net position. And this becomes one of those governmental reporting nuances where the project fund is reported at the modified accrual level, so kind of almost a cash basis. Again, there are some timing things for payables and whatnot, but not at this level. You're not seeing your capital assets, your infrastructure, and you're not seeing all your long-term debt. However, in that far right column, the statement of net position is really a full accrual basis. So this has everything, all your assets, all your liabilities. And again, this is just a function of the reporting that the JPA is required to do. But just in case you look at that statement and have some question of what's going on and why we have these different columns, again, it's one of those Governmental Accounting Standards Board requirements. And so that, from the balance sheet standpoint, you see that. And then on the next page, the same thing from the income statement standpoint, seeing those separate columns and some of the differences of how we have to report things on that modified accrual basis versus full accrual. On the statements themselves, any questions, maybe anything of how you see that seems unusual from a reporting standpoint? Okay.
Okay.
And then within the footnotes, then the footnotes then that support the financials are behind, and those are just there for further detail of supporting the amounts within the financials, describing what items are, is included as inputs in reporting those. So if any line items you want some more detail on, those footnotes, then we'll report some more information on there. So more of more significant ones to pay attention to, long-term debt and the various debt issuances that are out there. There's some detail on that. Any of the long-term contractual arrangements that the JPA has, and again, some of the details and the components of those, and then related party transactions. So any transactions between, and really in this case, between the JPA and the City of Lincoln and the university are reported there, just so that the reader can understand what those relationships are and what transactions are taking place. In addition to the audit report, I mentioned that separate letter, and within there, the only things I really want to mention, there's a section in there that talks about audit adjustments. If we had any changes as part of our audit process, any adjustments to the financials after they were provided to us by management, we'd report those. We're happy to announce we did not have any adjustments or changes. So the financials that management provided to us for the audit process were the final financials that you see here today. And then also, like I mentioned, from an internal control standpoint, if we had any of those items we needed to report, they would be in that letter. However, we don't have any, so we don't report anything at all within controls. We can't go and say that there are no control issues in writing. However, we can say that verbally for you today. And with that, I will take any questions you might have.
Questions?
Okay. Thank you.
Thank you very much.
Chris, is there anything at all we should be paying any attention to, or do we get straight A's on this?
It's difficult. Again, from an auditor standpoint, you almost look as more of the historian of saying, okay, what happened in the fiscal year, and then looking forward. I obviously, there's things that the board can look at going forward, but I know that from Steve and Mark's standpoint and budgeting and looking forward, I feel like they have a good handle on that, but that's not something we audit, so it's tough for me to say that to you. But that's really what the things that you need to look for. But it's tough for me in my shoes, looking at the year-end numbers to really, test what they're doing going forward.
Okay, thank you.
Yep.
Is there public comment on this item?
Jane Kinsey with Watchdogs. Could I have a copy of that? with all due respect to BKD, Watchdogs would like to have an outside source audit the JPA, just because there can't be too many eyes on what's going on in government or private business.
Is that the end of your statement?
Yes, that's the end of my statement.
Okay. Thank you. I'm sure we'll discuss that.
All right.
Is there further public comment?
I got one more comment. Chris, from a best practices standpoint, are there things, I think to kind of pick up on what the mayor was asking, if you notice things that are best practices that we could be doing as you review the historic year, I assume that would be put in your report to identify to us things that we can do to try to improve and make sure that we're, again, being good stewards with the money, and as well as again, performing best practices.
Yeah, we do, and a lot of throughout the audit process and being here, in the field with management on a day-to-day process throughout that audit field work. A lot of those things sometimes are just discussions of, as we notice things, we may just communicate those there. If there is something that rises to the level of the awareness of governance of the board, we would bring those to your attention in the letter. We didn't feel that, some of those suggestions that may come up on a day-to-day of well, maybe we just change how you're handling this, not so much of a whole change in, how you're reporting or controls. But some of those items are just communicated verbally at the time. If there was something, though, that we felt needed to be brought to the board's attention, we would have that in the letter, yes.
Great, thank you.
Okay, any other questions? No. Is there a motion to approve?
So moved.
Is there further public comment? Did I ask that? I'm not sure. I see none, so is there a motion to approve WH 16
So moved.
Second.
dash 13 dash 3, excuse me. Moved and seconded. Further discussion? Call the roll. Yes.
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 The resolution is passed. Moving on to agenda item number 8, resolution WH 16-4 with respect to approval of a consultant agreement. Mr. Hubka.
What's on your agenda today is an extension or a new contract, I guess, for Don Hers to act as a consultant to the JPA. Don has been under contract for already 4 calendar years. He's provided services that have been extremely valuable to me, and I think the board as well. And obviously nobody is more qualified to advise the board on certain matters related to our financial plan and so on than Don. The contract reduces the maximum from $12,000 a year from the last contract to $7,500 a year, and that's as much reflective of the actual amount that Don has billed us than anything else, but also I suppose the changing scope of the work Don's going to be doing in the upcoming years versus the last 2 years that this contract existed. And I think I'll just let Don kind of summarize some of the activities that have gone on, but we did accomplish one major milestone in this last year, and I'll let Don take over.
Okay. Welcome, Don.
Thank you. It's a pleasure to be here. Just for your information, over the 4 years, or maybe slightly longer than 4 years, I've billed a total of $24,000, about 400 hours worth of work over a variety of things. This past year, I billed $4,800 on two occasions. Most of that work related to, again, updating and modifying the cash flow projection going out till the end of the point where the bonds are paid off. Spent a significant amount of time this last year working on updating the District Energy Corp model and how that functions, and then maybe 40% of my time dealing with we call the private activity calculation. And if you're not aware what that is, to ensure that we did not spend any bond money on private activity cost, such as suites and those things that are deemed by the IRS to be private activity. And there was a fairly significant effort involving the financial advisors, bond counsel, JPA staff, and their consultants. And we finally did put that thing away, and we have enough room, private activity, or non-bond dollars to pay for all of that private activity, plus some in reserve should we decide to add more private activity. For example, dedicated parking stalls or sale of additional land. So that is what I've done in the past 4 years. And this next year, Steve asked me to again assist in finalizing these cash flow projections. For the most part, we now have history on most everything, and we're just projecting forward. For instance, the occupation tax, we're just projecting a 2%, a 1% real growth, and 1% inflation, a very conservative number. But there's a number. There's parking revenues, parking expense that are involved in these projections, and the couple that are still maybe being a little bit in flux is the turnback tax. There may be an opportunity, I guess, from what I hear, to perhaps see some additional turnback tax. The parking revenues are going to mature as there's more and more people parking there, and of course, the District Energy Corp, which you just discussed, there will be additional revenues there. So most of those things are favorable variances, I would think. And then I think the other the new item is to try and start working on a capital expenditure budget. We're just showing a flat $1.4 million for capital repairs. I think we need to develop a long-term capital budget. We've got a good start on the garages. Every 5 years we're making major repairs to those garages, but I think we need to work with the operator and start refining what those capital expenditures might be. There's a fairly significant amount of technology in the arena which needs to perhaps be refreshed or replaced sooner than heating, HVAC systems, and things like that. So that's what I'm going to be doing, and any special other projects that might come up.
And the maximum payment under the contract is like $7,500?
$7,500. Yeah, I've been averaging about $6, and my work, I think there's certainly a cushion there, but just in case you have a special project that comes up, then there would be some opportunity for me to help you with that.
Yeah. Okay, any questions of?
Oh, yeah.
Don? Yeah.
Yes. Thanks for your work.
You bet.
So in 2021, that's when we start paying principal as well as interest, correct?
Correct.
And that roughly will be something like $20 million.
Yeah, it's going from, our net debt service now is about 13 million. It'll eventually go to 20 million.
Okay. And looking at the figures that Steve just gave us in terms of the arena occupation tax, we gonna arrive on the moon? Or are we?
Yeah, I mean, the projections are that when we hit that initial 2022, 23, that we may be cash flow wise at a break even or slightly below break even, but we've accumulated a significant amount of cash. And as those revenues keep growing and your expenses for the most part are flat, you can see that you'll start generating a surplus and hopefully be able to pay off debt early.
Okay.
I think the first debt that can be paid off early was 20 years from when it was issued, so
Okay.
or 10 years, I guess. 10.
Thank you.
Well, I want to say thanks as well. You've done a great job helping here and consulting with us, but you also carry a tremendous amount of institutional knowledge, and that's been very valuable to the whole process. So thanks for all your great work.
Sure, no problem.
Me too, Don. Is there public comment on the resolution?
Jane Kinsey with Watchdogs. How much is that an hour that you're being paid?
55, he said.
How much an hour is he being paid?
$55 an hour,
55?
yes.
Okay. And the projection is to break even or slightly below. Where would it come from if it's below?
Well, as Don stated, there will be a significant balance by the time we get to that point. And once we start paying principal, there's a point where that's pretty level for many years. And the revenue should be growing even at the 2% rate. That will put us in a positive position after that. And if they continue to grow anywhere near where they have been the last couple of years, we'll be well into the positive range for cash flow. But once again, we're building up balances before we get to that point.
Okay. If it's below, though, where would it come from? The money below come from?
Well, there's going to be significant cash balances to absorb a fair amount of, negative cash flow. But once again, there's nothing that indicates that we're going to be in that position. The bonds are ultimately backed by property taxes, but there's nothing to indicate that we're going to be needing to do that, to levy a property tax.
So we might get a property tax if it's below? Or do you think you can finagle the budget?
Well, I don't care for the word finagle. That's not a proper accounting term.
Oh, excuse me, that would not be appropriate since it's black and white in accounting. So, do you think you can, I don't know, what's the word you'd use?
There just is nothing to indicate that that's where it's headed, even years down the road. We'd have to have pretty big collapse, I'd say, in the rate of growth and the occupation tax to have that situation arise. And as Don mentioned, there's money in the budget that, or in projections, $1.4 million a year for repair and replacement. I think we're covered well for those eventualities as well. So I don't think those types of things happening to us are likely to cause a financial hardship. They've been accounted for in the projections.
But the property tax backs it up.
Yes, and that's
Right.
why we got the low interest rates and the great bond ratings.
Okay. And let's see. Turnback tax. There is. Have you kept up with the law that they're talking about now expanding it?
Yes. Mm-hmm.
And where is that now?
I understand it's going to be debated on the floor of the legislature next week.
Next week.
Yeah.
Okay. Thank you. That'll help.
Okay, is there any further public comment on agenda item number 8? If not, is there a motion to approve WH 16-4?
So move.
Second.
Moved and seconded. Further comment? If not, call the roll, please. Yes,
Yes.
Yes.
the resolution is adopted. Agenda item number 9, the next meeting date will be Friday, April 29th, 2016 at 3:30 in the City County Building, Bill Luxford Studio, unless there's objection? No objection?
Arbor Day.
Okay. Is there a motion to adjourn?
So moved.
Second.
Moved and seconded to adjourn. Call the roll. Yes,
Yes.
Yes.
we are adjourned.